This article is coming from CNBC. JP Morgan Chase takes over First Republic after U.S. seizure of ailing bank. Regulators took possession of First Bank on Monday, resulting in the third failure of an American bank since March. The other two was Signature Bank and Silicon Valley Bank. JP Morgan Chase, already the largest U.S. bank by several measures, emerged as winner of the weekend auction for First Republic. Also in the running was PNC. JP Morgan's getting $92 billion in deposits in the deal. The bank has taken on $173 billion in loans and $30 billion in securities. The FDIC agreed to share losses on mortgages and commercial loans that JP Morgan assumed in the transaction. Now, I didn't know this about First Bank, and it kind of makes sense why it was also a weak link. Since the sudden collapse of Silicon Valley Bank in March, attention has focused on First Republic as the weakest link in the U.S. banking system. Like SVB, which catered to tech startup community, First Bank was also a California-based specialty lender of sorts. It focused on serving rich coastal Americans, enticing them with low-rate mortgages in exchange for leaving cash in the bank. JP Morgan CEO Jamie Dimon titled the acquisition in a statement early Monday morning. Our government invited us and others to step in, and we did. He said, this acquisition modestly benefits our company overall and is accretive to shareholders. It helps further advance our wealth strategy and is complementary to our existing franchise. Now, JP Morgan went on to CNBC to state that the U.S. banking system is healthy and the crisis is over. All right, so let's listen into this video on CNBC regarding First Bank.
If your child has diabetes, you'll love how easy Dexcom G7 is. It's on, and he's off. You can see his glucose numbers right on your phone, so you can always be there for him with Dexcom G7.
Welcome back to Squawk. Regulators seizing First Republic Bank and accepting a bid from JP Morgan to assume its deposits and assets. JP Morgan releasing details of that deal just in the last half hour. It is the big deal of the morning. We hope it ends what might have been contagion. CNBC's Hugh Sun joins us now with more. Hugh, what are you seeing?
Hey, Andrew. Couple things. I mean, I'm still absorbing the news as we speak. I was updating the story on CNBC.com just a few seconds ago. And my observation is JP Morgan, the big is getting bigger. They won the 2008 financial crisis by acquiring Bear, Stearns, and the banking assets of WAMU, and they are a winner of the 2023 regional banking spasm or crisis as they acquired a lot of the assets and deposits of FRC. So they're getting effectively $200 billion in the troubled balance sheet of FRC, and I think that's what won them the deal at the end of the day. If you look at some of the details from the FDIC, it's costing them approximately $13 billion to that deposit insurance fund, and that is a lot less than the highest figure that was circulated in the days ahead of this deal, that figure being about $30 billion. And so I think the FDIC had some decisions to make. They said, they could have given it to PNC or Citizens or another regional bank, and that perhaps would have been politically more appealing. But they decided to go with another premise, which is we're going to do the deal that has the lowest impact to the DIF, to the FDIC Deposit Insurance Fund, and that was the most capable purchaser, which is JP Morgan. Andrew.
Okay, Hugh, we appreciate.
All right, so as we get into the charts, this is PNC Bank. We're going to go to JP Morgan. Now, before we get into the charts, what's interesting about this deal is that First Republic Bank seizure and the selling to JP Morgan is the second largest bank failure in the U.S. in history. Now, JP Morgan was supposed to be ineligible to acquire First Republic Bank because it already controlled 10+% of U.S. deposits. However, if a deal did not go through, it would have removed additional confidence in the U.S. banking system. Maybe that's why Bitcoin has gone down. So we're going to go to the monthly chart, and price gapped up. Right, that's a monthly gap as we started the first trading day of May, and it's sitting in resistance support band at the 141 level. Let's go to the weekly chart, and you can see for the first trading day of the month, we now have a indecision candle. I'm sure that will make its way either up or down as the week transpires, but you can see this resistance, support, resistance at the 141 level. So we need to see a close on the weekly chart above, say, 145 in order to get additional confirmation that price wants to go higher. All right, let's go down to the daily chart, and price nearly came into the daily buyer zone at 122.50, but missed it by, I don't know, say 10 cents. All right, so this is the gap up that we've seen. It's early morning trading. It's 10:14. Price is deciding which way it wants to go. Will it fill the gap, or will it eventually close above these pivots at 144? Like I said, we get a close on the weekly or the daily above 145. Ideally, the weekly price can move higher. I don't know where price is heading next. Too early to determine. We could close the gap because it couldn't get this band, or we can go higher because of confidence in the U.S. banking system, but also could go higher because Wall Street is seeing this deal being very beneficial to JP Morgan, meaning they got First Republic Bank for not cents on the dollar, but they got a good discount. That's all I got for now. Thanks for watching. Subscribe. Please like the video.